Good morning, hello, and welcome to today's morning market call. My name is Ian Joseph, market analyst at HFM. Now, a quick disclaimer is this information is only meant for educational purposes. None of it should be construed as investment advice. Trading the financial markets do carry a degree of risk, and I'm here to help you look for high probability setups. Now, starting off with the economic calendar. Last week, we had a lot of activity in the financial markets, especially the highlight being the Jackson Hole Symposium. And today, we want to look at how that affected the markets and how it could affect future markets. Starting off with the day once again, today is going to be relatively quiet in the financial markets. We did have New Zealand retail sales coming out earlier on in the day. Moving over to British pound, today is summer bank holiday, which is usually celebrated on the last Monday of August each and every year. So we anticipate relatively low liquidity in the eurozone, especially in the British pound pairs. Moving over the day, we don't have any high impact news release, and this is quite anticipated because once again, whenever you're looking at the final trading week of each and every of each and every weekly, the last week of each and every month is usually low volatility that is anticipated because already the markets have moved where it wanted it to move. Now, going back to the Jackson Hole Symposium, which was very, very interesting, and there was a lot of activity that we did anticipate, and it did happen actually coming from Fed Chair Jerome Powell, who did fresh challenges, and this was something that we want to dive deep into, starting off with how the markets did move exactly at that particular point in time. Now, before we do head there, there was a few things that he did mention, especially in terms of interest rate cuts. And if you can look at the Fed Watch tool, the statistics has actually jumped up to 87.3%, whereby there's a high likelihood in the next 23 days, less than 10 hours to go, we might anticipate our first interest rate cut this year by between 400 and 425 basis points. Now, this was quite interesting because the markets were waiting for the final clue from Mr. Jerome Powell himself about the interest rate, and this is something that we are anticipating, an interest rate cut in September. Now, could there be another one before the year does end? Only one way to find out, but the markets interpreted this data very, very interesting, especially looking at stocks. Looking at stocks on the daily, we are seeing Nvidia up 1.7%, Apple 1.27%. Tesla has been one of the biggest gainers at plus 6% ever since the day did open, where most of the stocks have taken this information very, very positive in terms of lower interest rates. Remember, interest rates do mean that there is going to be lower borrowing costs. So whenever you're looking at equities, this means that these companies are going to receive loans at a much cheaper price, and this is going to reflect in their prices in the long run. Now, if I can switch gears to the chart, starting off with the S&P 500, as you can see, we were trending to the downside last week. We did find a region of support around 6,300 region, whereby after New York open, where Jerome Powell did begin his speech and the markets digested his data. Now, one of the major things that he did talk about, as mentioned, was the interest rates, whereby he has hinted at there's a high likelihood or certainty that we might see the first rate cut this year. Now, this is very important. Also, looking at where they're from, when he was asked about the Fed's independence from political inclusion, let's say, for example, Trump. Remember, once again, Trump was the person who did put Jerome Powell into office, but currently at the moment, they have been brushing shoulders. And one of the things that he also wanted to talk about was the impact of tariffs on consumer prices. Now, remember, when the tariffs were impacted onto the markets, these costs will usually be passed down to the consumers. And he did hint that, okay, inflation might start going higher because of the impact of tariffs in the long run. And looking at the information right now, he was skeptical about could this be an earlier moment to cut interest rate cuts. But looking at everything that has been happening, looking at the job markets, the past 2 months job data has actually come out lesser than anticipated. Looking at last month's, this month's data did come out at 73,000 jobs. Last month's data was revised down to 14,000 jobs, which was quite one of the lowest that we have ever seen in the financial markets. And looking at this data, he is very skeptical, but he is not worried about could this offset what they have been trying to do ever since the post-COVID era. Now, looking at the charts, ever since the data was released, we did see the S&P 500 gain quite aggressively from New York Open. Ever since London Open to New York Open, we did see the S&P 500 gain almost 2.07% of its total value as a result of the data. Remember, once again, if interest rates are going to be lowered, it means it's going to be good for equities. And we did see the S&P 500 rally to the upper side. Currently, at the moment, we are in a region of resistance around 6,484, and we would want to look at how the markets are going to react around that region. Remember, the markets move by impulses and correction. Currently, we are correcting. The candlesticks are printing side by side at the moment, and we want to see how this price action is going to play around the region of interest that we are looking at currently at the moment. Remember, once again, we do react to prices. We don't move prices in the financial markets, whereby there is a lot of inefficiencies that are residing below this region. Once again, if the markets do close, if we do have a candlestick that breaks below these lows, closes below, we might see prices coming back into these regions of inefficiencies around 6,402 region. But once again, with the interest rates being highly likely, if we do get a candlestick that will close above this region of resistance, this means that the ceiling will be broken and prices could continue moving further to the upper side, possibly taking out a new higher high, which could be the all-time high that we are looking at. If I could switch gears to the daily time frame, if we do break that region, then prices will continue moving on to an all-time high. Looking at the daily candlestick, how it's forming, very interesting. If I can switch over to the weekly time frame, once again, as you can see, the weekly candlestick has opened with a body to the downside. Currently, there is no wick to the upper side, meaning could this be liquidity being generated whereby the markets opened, comes to form a low, form a high, and then finally close before the monthly candle does end by the end of this week. Remember, once again, this is the final trading week of the monthly candlestick, and we will want to see how prices are going to react on the closure. Looking at the historical data, the S&P 500 has been making higher highs and higher highs ever since, and we want to see how this could fare on, especially coming from the speech that Jerome Powell did release last week as a result of the Jackson Hole symposium, which is a symposium that is usually held every year, and top uh, central bankers from all over the world come around and talk about matters including finance. And this one was the greatest that we have ever seen, especially looking at the volatility that was created as a result of Jerome Powell's speech and many central bankers who were given the podium, and they were talking about where the markets could be headed to in the near future. Looking over to the Nasdaq, which is a tech heavy index, and I will want to switch to the daily time frame, whereby we did have price action playing out really nicely over the past, whereby the markets did make a higher low, and then we did form another high, which previously broke the most recent high. The markets did retrace to regions of inefficiencies around this order block that was residing about 22,900, around the 23,000 region, which once again is a psychological level in the financial markets. And then we did have buyers coming into the market, whereby we did have this bullish engulfing candlestick on Friday, whereby the data also, looking at the Nasdaq, was interpreted positively as a result of, yes, there is going to be a very high likelihood of interest rate cuts in the near future, and we did see equities rally to the upper side. Remember, once again, equities do depend on borrowing, and if borrowing is going to be made cheaper for companies like Nvidia, companies like Apple, it means they're going to have much more money in terms of research and development, meaning we are going to anticipate prices to continue moving further to the upper side. Once again, we did have support forming around 22,000 region. Prices did retrace. We did have a low that was formed, but it did fail to break the most recent low, meaning this support region did hold, and then prices aggravated to the most recent region of resistance that we were looking at a while back at 23,500 region. Now, currently at the moment, the candlesticks are printing side by side, it being the last week once again, and today being a Monday. The markets will want to wait for the next trigger in the financial markets for another push to the upper side. But once again, if we could highlight regions of importance, I would want to see how price action is going to behave around this region. If you do get a candlestick that closes above this region of resistance, the ceiling once again will be broken and it will be support, which means this is a higher likelihood whereby if we do get the interest rate cuts in the next 23 days, meaning institutions will start pricing in this data as early as now. But remember, there's also a possibility that the markets could close below this region and we'll see prices coming back down to these regions of inefficiencies, and we'll want to see how price action is going to react. If at all we do break to the downside, we do come back to this region of support around 22,000 region. But currently at the moment, with the data that we are looking at currently at the moment, exempt for the NFP data that will be released on the first week of the monthly, which is going to be next week. Very, very interesting how we shall see the labor markets progressing in the United States of America. Looking at where we have come from, the data has been worrying in terms of employment, and we'll want to see has the trend been continuing. And this could have an impact on if the Fed is going to have two rate cuts or just one rate cut this upcoming September as a result of the data on the non-farm payroll and the CPI numbers that will be released later on as time goes by. Now, looking at the US 30, the Dow Jones, once again, we did break out of this consolidation. This was a region that we were looking at last week, and we did see prices maintain about this channel, and we were asking ourselves, if we do break to this high, if we do break out of these highs, then it means that there's a high possibility prices will continue moving further to the upper side. And we did see this huge candlestick here, particularly these two huge candlesticks that came. This was exactly 5 p.m. on Friday, and this was when Jerome Powell started his speech. And then the markets gyrated aggressively to the upper side, whereby when he mentioned about the rate cuts, the markets took this information very positively. The candlestick did close above, and then we entered a period of consolidation or correction, if you call it. Now we are waiting for the next trigger. If prices do come trace back into this region, we'll want to see if the resistance zone now will act as support for a further continuation to the upper side. But once again, looking at price action, there's a high probability also that prices will continue moving back to the downside. Come fill these inefficiencies for a further continuation to the upper side, depending on the data that will be released next week. Okay, so the Dow Jones is very interesting looking at it currently at the moment, whereby we've just broken the most recent selling, and looking at it on the daily time frame, we are currently at all-time highs, whereby the Dow Jones is currently trading at 45,593. These are territories that we have never been in the past, and this is something quite interesting to look out for in the financial markets. Looking at where we are from, the Dow Jones is very, very bullish, and we anticipate that this markets will continue moving to the upper side if at all the data that does persist. Looking at it on the daily candlestick, as you can see, we have a very interesting piece of price action playing out at the moment, whereby this candlestick is bearish. As you can see, it did open, move to the downside, has formed a low. If we start rejecting this low, breaking the opening price, it means that there is a high likelihood prices will continue moving further to the upper side. Switching gears to the Russell is the top 2000 medium cap stocks in the United States of America. And this one usually is a much more clearer gauge of how the economy is doing, because this is where most of the money resides in the financial markets in the United States of America, whereby once again the prices have been rallying to the upper side. We did form higher highs, higher lows, higher highs, higher lows, and currently we have this very, very big bullish candlestick once again on Friday, whereby when Jerome Powell did speak about the interest rate cuts, the markets took this information positively. And as you can see, this one candlestick completely engulfed what has been happening for the past 7 trading days, just completely engulfed by one candlestick, meaning investors, institutions are buying into equities currently at the moment very, very aggressively. The FTSE was not left behind, because once again, all of these companies are tied together. They are positively correlated. And looking at it once again, the data has been coming out, mixed reaction for the British pound, but generally looking in the long run, the markets are doing very well in terms of the trade deals that have been happening between the Eurozone and the United States region. When you're looking at the British pound, there were trade deals in terms of manufacturing. When you look at the UK, they do produce a lot of good manufactured equipment. Let's say, for example, Rolls-Royce, McLaren, and the United States is very big in terms of consumption. The United States is usually the biggest markets for these companies, and if at all the goods are allowed into the United States, it means that these companies are generally going to do well. And we did see the bullish buyers into the market for the past 5 days. We have been seeing the FTSE rallying aggressively. Now today, This I'm looking at the daily candlestick. It do have 13 hours 43 minutes to go. It being a Monday, we could anticipate this candlestick is either going to form the low of the week, meaning if you start rejecting this low, start to break the highs, it means that prices will continue moving further to the upper side. But this will be dependent if new data will come out of the markets. But looking at it currently at the moment, with everything that's happening, all the equities are on high gear, firing on all cylinders to the upper side. Looking at the dollar index did take a beating on Friday once again because of the data. Now, remember, if lower we do have lower interest rates, it means that we are anticipating a weaker dollar. Now, we do have a weaker dollar, it means the dollar index is going to take a beating. Now, looking at it, we are in a region of support currently at the moment, whereby we have been holding ever since 28th of July this year. The markets did retrace back into that region, tried to break to the upper side, but we had this massive bearish candlestick as a result of the data, as a result of the news that Jerome Powell did put into the markets, giving investors confidence that in the next 28 days, we do have a very high likelihood that we might see interest rate cuts. But once again, looking at October 29, October, if I can just look at this data right now, let's wait for it to load. There's a 49% chance we might see the interest rate cuts between 400 and 425 basis points, but the markets are not leaving out another interest rate cut in October, whereby there's a high likelihood we might see another 25 basis points cut, bringing interest rates down to the region of 375 to 400 basis points. Now, this is quite interesting, whereby we only have two meetings exempt from September, whereby the Fed, the FOMC are going to release the interest rates. Looking at it currently at the moment, there's also a 35.4% chance that we might see interest rates going back down to 350 to 375% basis points in the financial markets. Now, this is very interesting. We would want to note how this data is going to be affected in the upcoming few weeks, especially looking at the next barrier that we are going to face is going to be 17th September, whereby once again we are looking at 87.2% chance that the Federal Reserve are going to lower interest rates. Now, if they're going to lower interest rates, it means they're going to weaken the economy, because treasuries bonds are going to be less attractive to investors, but it's going to mean good for equities once again, because it's going to mean lower borrowing costs for these companies. But looking at it from the companies aspect of side, yes, it's going to be good. But for the general economy, we are anticipating a weaker dollar. Looking at it currently at the moment on the daily perspective, remember once again, this is a Monday, meaning if we do get this candlestick, it has already started rejecting the highs that has been formed around 97.9, which is a psychological level in the markets. We are rejecting that region. If we do get this candlestick start to flip bearish towards the downside, it means that we are anticipating prices to continue moving further to the downside, meaning if I'm looking at anything against the dollar, I would want to be on the safer side. Switching gears to the precious metal. The precious metal has been in a channel, and we did see prices come to test the trend line that we have been looking at. If I can zoom out this chart, we have been consolidating for quite some time. And if I can just bring up my measuring tool, for the past 131 days, we have been in a consolidation, whereby the markets have neither been making concise high highs or concise lower lows, meaning the markets were waiting for the next trigger, and the next trigger could be the interest rates that we are currently looking at, whereby we did fail to break below this region of support around 3,313 region. The markets last week was playing around the psychological level of 333, and we did close above that region last Friday. Quite interesting to note in the markets, whereby we were noting this region of support that was around the 3,300 region once again, whereby the markets did close to the upper side. Let me remove this. Let me have a clearer chart here, whereby we did have this region of support, the first touch, the second touch, and we were looking at this third touch. Yes, we did have a candlestick that broke to the downside, but it closed above that region, meaning this region of support still did hold against the sellers, whereby sellers tried to push this market. As you can see, the candlesticks were struggling to print to the downside. And then once again, when the speech did occur, especially after New York Open, whereby New York Open did come down, grab liquidity, and then the next candlestick completely engulfed the opening price for New York. And then when the speech did begin for Mr. Jerome Powell, we had this massive candlestick. As you can see, there is no wick to the bottom side, meaning there was a lot of volatility, there was a lot of volume whereby buyers completely overpowered the sellers, and we had this region of resistance being broken around 33.52 region, and then we are entering into a period of consolidation currently at the moment. We'll want to see how the markets are going to react. If we do come back and retest this region, then it will mean there's a high likelihood that we might still see prices of gold moving further to the upper side. Remember, once again, we do react to prices, meaning there's a possibility that prices will continue moving further to the upper side if at all the data does persist coming out the way it has been in terms of looking at the interest rates for the United States of America. Remember, once again, all eyes are on America currently at the moment, because technically speaking, they're the biggest economy in the world. And if we do have interest rates in the near future that is going to affect the dollar, there's a high likelihood it's going to have a ripple effect onto other economies, including the Japanese Nikkei 225 index, which is the top 225 companies in the Japan region, whereby once again we did have region of support, whereby we had a first touch, second touch, we can't consider this a third touch. We did have a candlestick that broke to the lower side, grab liquidity, but we did have a close above that region, and then we had bullish presence coming into the market. If at all we do hold this region of support around this region, it means that the Nikkei could continue moving further to the upper side, because remember, once again, Japan, they do produce a lot of goods and services, and they sell it to other economies. Yes, if we do have a lower or a weaker dollar, then this means that yes, it's going to eat into their profits. But once again, looking at Japan, they are a very big economy in terms of exports compared to imports. Now, looking at black gold, very interesting. Looking at black gold, last week we had a an interesting region of support forming, especially coming from the geopolitical tensions, whereby we did see top leaders in the world coming together, including Donald Trump, including Zelensky, including Vladimir Putin. And then there are no official talks of a ceasefire yet, but we did see black gold reacting to it positively, in terms of we did have a candlestick that broke to the downside. But once again, and these markets are very fractal. If you look at oil, if you look at the S&P 500, if you look at gold, they do print almost in a similar manner, meaning they are positively correlated. Looking at investors, investors have patterns into how they do push money in the financial markets, whereby looking at oil currently at the moment, we did break the highs that we were forming. This was Friday, the 15th of August. We did form a high, then 18th of August. Currently, last week's trading candlestick from Friday did break to the upper side, close above this region that we were looking at. Very, very interesting. At the moment, we do have candlesticks that are printing side by side, meaning institutions, investors, the black commodity is waiting for the next trigger in the financial markets for it to either push to the upper side, or if we do have breakthrough coming out of the eurozone, then we might anticipate prices of oil moving further back down. Remember, oil is very, very highly tied to inflation. High oil prices usually tend to mean that there is going to be high inflation, because most of the goods and services are tied to black gold. Now, looking at WTI, which is Western Texas oil, similar price action printing out, whereby last week we did identify this candlestick, very interesting candlestick at $62.9 a barrel on oil, whereby we did get a candlestick that close to the upper side. We had a retracement, but the markets did correct itself very, very quickly afterwards. Now, this once again was during the Fed chair Jerome Powell speech, and the markets do listen, the markets do wait for the most impactful news releases. As investors, they want to digest data. They want to say, okay, if we are going to get lower interest rates, what does that mean for the prices of oil? Now, switching gears to uh, currencies, starting off with the United States dollar against the Chinese yuan. The Chinese yuan did gain against the USD because, once again, if we are going to receive interest rates, it means we are going to anticipate a weaker dollar. And we did see the United States dollar lose against the Chinese yuan, especially starting off ever since Friday evening to where we are currently at the moment. We have lost 0.5% of the dollar against the Chinese yuan. And could this trend continue moving to the downside? If at all, we do have those interest rates coming on September, whereby if we do get a candlestick that closes below this region, we have a retest, then this could mean that prices will continue moving to the downside. Basically, everything against the dollar is currently weakening, is gaining strength. Sorry, the dollar is weakening, whereby looking at the euro against the USD last week, ever since 1st of August, this was NFP, whereby NFP, the job numbers did come out negative for the United States dollar, and we did see prices pushing to the upper side, forming new higher highs and higher lows, whereby it has been retracing, yes, but we did close above this region, meaning this region of support did hold. We did have massive momentum coming in on Friday once again as a result of the speech from Jerome Powell, whereby we did break the most recent region of resistance. The candlestick did close above that region, a small retracement, but currently at the moment we could be headed further to the upper side. Now, if you are looking at potential areas that you could be looking into for further continuations of Fibonacci, is usually a good tool for you to look at potential price retracements in the near future. So the region that I would want to be looking into of interest will be the 1.16800 and the 1.16600 region, looking at how prices are going to react to that region. If you do get a candlestick that closes below this region, it means that there's a high probability we might continue further to the downside. But looking at it currently at the moment, we might anticipate a short-term retracement for a further continuation to the upper side, if at all we do receive those interest rate cuts, which are very likely in the near future. The British pound against the United States dollar, once again, looking at it, we did have a massive push to the upper side, and this was a very good region for the Fibonacci, whereby we did retrace on the golden region. Now, this is what we call confluences in trading, whereby it does respect the 50 and 61.8 region once again, and this was a psychological level being included in a region of support, whereby the markets did hold this region around 1.33988, and the bullish candlestick once again at exactly 5. This was 4 p.m. on the British pound against the dollar, whereby this was an hour before the Fed chair speech. And we are anticipating for a further push to the upper side, but we do have this region of resistance that is currently around 1.35836, and we want to see if we do get a candlestick that closes above this region, then this means that buyers are in control over this market, complete control, and we might anticipate prices for moving further to the upper side. But once again, today is a Monday. You need to be careful as a trader, especially it being the last trading week of the monthly candlestick. Once again, risk management is crucial in these markets. GJ has been consolidating for quite some time. Looking at it on the H4 time frame, we did have this region of resistance that has been holding for quite some time. Prices are struggling to break and close above this region, above the 200 region, which is once again a psychological level when you're looking at British pound against the Japanese yen. Currently at the moment, we did break the most recent low. Could this be a change of character in the near future? Only one way to find out, whereby we are starting to make new lower lows. If we do get candlesticks that start to close below these lows, then it means we might anticipate prices continuing moving further to the downside. But the region of interest that I would want to pay attention to is this particular region, looking at the order block that we did have at 197,794, and this was back on 8th of August at exactly London Open. Dollar Swiss consolidating once again, and we shall look into the commitment of traders before we do call it a session, whereby there is one interesting thing that we have been noting on the dollar against the Swiss franc, especially coming from the geopolitical tensions that we did see, whereby the Swiss franc was seen as a safer haven. We did see prices moving further to the downside. We have been correcting that move prices failed to break the highs that was formed before the geopolitical tensions, and we entered into a period of consolidation that has been holding on for quite some time. Looking at it currently at the moment, it has been consolidating for nearly 26 days, 20 hours, and we want to see if prices will either break to the lower side or to the upper side. Which brings me to the final segment of this morning market call, which is going to be the commitment of traders. Looking at the Swiss franc currently at the moment, and from August 12, 2025 to August 19, 2025, we did see institutions offload almost 995 long positions, while at the same time they did add almost 624 net short positions, meaning institutions are favoring selling the Swiss franc. Looking at the Canadian dollar institutions have added only 284 long positions, while at the same time they did offload almost 3,263 net short positions. Quite interesting in the financial markets. Looking at the British pound under asset managers and institutions, under longs, we did see institutions add almost 1,929 net long positions, while at the same time they did offload almost 2,900 positions, which is quite you can't say this was expected because of the interest rate cuts that we are anticipating, meaning institutions will want to favor assets that are going to bear much more in return. And in this particular case, everything against the dollar could be seen as a safe haven. Looking at the Japanese yen once again, institutions did add almost 5,110 net long positions, while at the same time they did offload almost 4,760 net short positions, meaning institutions once again are favoring buying more on the yen. Looking at the euro once again, similar pattern whereby institutions did add 2002 net long positions, while at the same time they did offload almost 1790 net short positions. Looking at the Aussie against the dollar, 3,000 positions were added, while at the same time 9,396 net short positions were added. Now we'll want to look at gold. On gold, I would want to go to metals and other under the short format. Starting off with silver metal under managed money, we can see that institutions added almost 543 net long positions, while at the same time institutions offloaded negative 223 net short positions. And if I can just switch gears to my chart here on silver quickly, ever since 12th of August to 19th of August. Let's look at how this information is important to us. So around this region here, looking at silver, institutions have been favoring more long opportunities. Looking at the net long positions that we do have on silver, under managed money, we do have net long of 44,397 and almost 16,351 net short positions. So looking at ever since 12th of August, which was around this region here, to 19th of August, somewhere around this region, we did see institutions add. Yes, there was a push to the upper side. We had a retracement, but we did close above this region, whereby on Friday we did see prices pushing further to the upper side. And I will want to look into this week's commitment of traders. If at all the bullish presence that we have been seeing on these commodities, if we are seeing more positioning, if institutions are favoring more long positions, and we shall reflect that onto next week's Monday morning market call, whereby I would want to look at the data. I would want to see if institutions have added more positions, especially on the commodities. I would want to pay attention to gold. I would want to pay attention to silver. I would want to pay attention to oil, whereby did they add more positions because of the strong bullish presence that we are seeing currently printing on the charts. This justifies that once again, the commitment of traders is a good tool for you as a trader to look at how institutions are positioning themselves in the market. Now, I was looking at gold. Gold did give me mixed reactions in terms of looking at managed money. We did see almost 8,949 net long positions being offloaded, while at the same time, almost 2,000 positions were added to shorts. Now, this was from 12th of August to 19th of August. And if I can go to my chart on gold from 12 to 19. This is XAUSD from 12 to 19. We did see institutions offload a lot of long positions, and we did see prices retrace to the downside back into this region of support. But could this week be very crucial in terms of looking at the COT data, whereby could we see institutions adding more long positions, especially coming from the speech of Jerome Powell, whereby gold would digest this data very positively, and we'll want to look at the next region of interest, which is going to be around this region at $3,400 an ounce, which once again is going to be a very key psychological level in the financial markets. Now we have added a segment whereby I would want you to engage with me, ask me which pairs would you want us to be looking at. Now there's a, let me go back to my HF area. We are currently, the Mercedes is going away on third. The Mercedes shall go away on third, and we shall hold that live. But currently at the moment, remember, for every position that you do take, especially on gold, is going to be a point. Redeem those points. Remember, not only a Mercedes-Benz is being offered, we are giving away 10 iPhone 16s and 5 trading stations. The only requirement for you to trade is to trade gold. Currently at the moment, we do have a bit of time remaining, but it's not too late for you to enter into the giveaway. That's going to be it. Let's switch gears to the questions. Jeremy, Nibsnal, thank you for being the first ones to join. Where can I get this video to study it slowly? It shall be updated on the YouTube very shortly. Before the end of day, we shall update this morning market call to YouTube. Euro USD, okay. Let's go over Euro USD once again. Now, the euro against the dollar right now is considered a safe haven. Looking at where we have come from, remember this was 1st of August. Prices was trending to the downside, whereby we did see the bears into the market. They did have complete control over the markets. But when the data did come out negative, this was NFP, whereby the revisions were down to 14,000, and last month's data did come out at 73,000 jobs being created. The euro was considered stronger against the dollar because institutions are looking at these numbers. Okay, we are not creating jobs as much as we would want currently at the moment, and institutions started changing direction of their bias. We did start seeing highs being formed, higher lows. Now this low did respect the most recent low, closing above that region, and we did see prices continuing into a region, a very interesting price action currently at the moment. Now, where we are, we did form support around 1.15800, which is a psychological level. What do I mean by psychological levels? This is whereby institutions tend to favor more round numbers in terms of trading because it makes it easier for them to push money from zones to zones. Okay, so when you talk about psychological levels, there's a high probability prices is going to react to round numbers. Okay, it's not always a must, but it's what you call psychological level. So we did form a support around 1.15800, and then when Jerome's speech did come out, we did have this massive candlestick that did outdo what has been happening. If you look at this channel that we have been trading for the past 16 days, prices has neither been making clear higher highs or higher lows, but with this one candlestick as a result of the speech from Jerome Powell, we did see euro dollar break the highs around 1.7298, and we closed above that region. Quite interesting. We did close above that region. Now, when the markets did open, we had a short-term retracement. Looking at it on the daily and the weekly perspective, this is something very interesting to note. Look at how the weekly candlestick is printing. Now, we do have 4 days, 15 hours remaining. And as a trader, you want to ask yourself, what are the probabilities that this candlestick will either flip to the upper side being bullish, or it will continue being bearish in the financial markets? Now, looking at the data and everything that we have been looking at, if we do anticipate interest rate cuts in the near future, there's a high probability that we might see the dollar weakening against the euro, meaning you're anticipating more bullish candlesticks compared to bearish candlesticks. Continue comparing COT data to pairs. That's a lot of data. It is a lot of data. Yeah, it is a lot of data to be looking at, and I'm going to have a separate segment on that. How do I get the commitment of traders report? You just basically go to cftc.com. Okay, cftc.com. It's .gov. Sorry, it's .gov. It's a government website. It's .gov, not .com. Forgive me on that. Now, when you go to cftc.gov, you come to market data and economic analysis. Then you want to scroll down to commitment of traders. So here it is. If you want to look at gold, it's going to be metals and others. You do have electricity, natural gas, petroleum, agriculture. If you want to look at financials, you go to the long format. I tend to look at futures compared to futures and options because with futures, traders are obligated to hold their end of the trade at the specified time. With options, they could back out at any time. So futures tend to have a much more clearer direction into how institutions push money. Now you can move to current legacy and reports. There's a lot of exchanges. If you want to look at the exchanges, it's advised you look at the CME, the Chicago Mercantile Exchange, because it's the leading exchange in terms of derivatives in the United States. Have we done some gold analysis? Yes, we have. But don't worry, this one is going to be uploaded. Let's get back to gold, Kylie. You want us to look at gold? Okay, we can go through gold once again. I'm looking at more long opportunities, looking at the weekly perspective, look at how this candlestick is printing. If we can focus on this particular candlestick, we did open here. Prices moved to the downside. Currently, we are rejecting those lows. So as a trader, you ask yourself this question: in the next 4 days, 14 hours, this candlestick will close. What is the probability that this candlestick will either close to the upper side or close to the downside? Now, looking at the data, we are anticipating a weaker dollar in the long run as a result of the interest rates. So you ask yourself, and I'm going to have this segment on the actually starting next week at the Oval Office, whereby I'm going to hold a segment of how to bridge the gap between fundamental and technical analysis, because sometimes you look at this data and you ask yourself, like, how am I going to piece this data to make probabilities in the financial markets? Okay, there's a good question from Kiganiste. Between Ukraine and Russia subsides, which companies can we invest in that will spearhead the rebuilding of the destroyed buildings and infrastructure? That's a good question. I'm not a financial advisor. But if there is going to be a truce being brokered between the two countries, companies that are going to really do well are the commodities. Okay. When you look at Russia, Russia is a big geographical location and they do have a lot of resources. So when you look at Europe, Russia does provide almost 20 to 26% of energy that Europe consumes. Now, looking at where we are headed to in terms of when you're looking at market cycles, Europe is usually cold during December's, meaning that there is usually an uptick in energy that they do consume. So if there's going to be truce being brokered between the two, there's a high probability energy will be the first to recover. Not financial advice, huh? Okay, so that's going to be it for me. Thank you. Stay safe. Once again, may God protect you. May your enemies respect you. May death neglect you and your families. I shall see you in the next segment, which is going to be tomorrow at exactly 10 a.m. Stay safe. Risk management is going to be very important for you to stay in the markets. Have a blessed one, huh?